What's up, boys and girls? Old Uncle Toot back with you once again. Bitcoin price has been pumping from the low and everybody's getting bullish, but you haven't seen from me a scenario in which the bottom is in. That doesn't mean that I'm blind to the possibility that the bottom could be in. I just don't see the probable Elliott Wave scenario that puts us there. I can always be wrong. There's always times in the markets when I don't see things, but it doesn't happen that much. So let's go ahead and get into it and talk about the three scenarios that I've been tracking for you and for the members, mainly for the members, of what could be happening. But also, I want to throw one more down on the gauntlet. Another scenario that would be able to have this bull rally sustain much further, but still ultimately not putting a new high before creating a new low relative to this 15K level. So let's go ahead and dive into it. First and foremost, let's talk about the count that I've been tracking for pretty much the entirety of the bear market. Ever since that we eliminated the potential for this to be a scenario of a 1-2-1-2, is that I've been tracking a giant flat, A, B, C. And because I've been tracking a giant flat, we've been hoping and expecting for a 5-wave motive structure to play out here. Now, of course, there's a potential where I'm incorrect because there's so much uncertainty at this low that there is a scenario on where we could have a 3-wave pattern here, but I find that to be far less likely than a motive pattern for a couple of reasons. The first reason is that this just fits perfectly as a perfect zigzag. Channels perfectly, measures perfectly. Everything about this tells me a perfect zigzag. And of course, that's the log, so it's a little bit longer than 1-to-1 in arithmetic, but in log, it's almost 1-to-1 as well because we don't have too much price difference in here. Just about double, not 3-to-1 like you would expect. However, we do want to look at this whole structure in log because of the price differences in the moves up here compared to down here. But here's your perspective. Okay, so this is what I've been tracking. Fully aware that there's a potential for this to finish in a 3-wave, and we'll talk about you bottom callers and your 3-wave and, you know, why we don't like that at the end. But this has been what I've been tracking. So that expectation tells me that we should finish this in 5 waves down. All right, so you know now that I expect that we should finish this in 5 waves, each successive wave being a motive structure. As we see, this isn't a motive structure. Okay, so let's cover the scenarios that I've been tracking based on the macro that I just showed you. Don't worry, I'll get into all you other people that have, let's say, counts that I don't like, but they are within the realm of potential possibility. And we'll just ignore the rest of the outliers that have no idea what they're talking about. So, first, I've been tracking 3 scenarios. The first scenario we'll talk about is eliminated. It's blown out of the water. It's no longer on the table, which is great because typically I won't even present to you 3 scenarios. But when we had this funky price action going on here, I didn't know how to best present that. So the first scenario would have been that wave 4 was put in here and that we were putting in an impulse to the downside to finish the 5th, right? Simple, standard impulse, right? And, you know, I started tracking it with some funkiness going on in here and talking about the ways that it would have worked. And the last time I presented it, let's say, I think I presented it to the public. It's definitely been talked about to members plenty. It would have been, you know, 1, 2, 3, 4, 5 to here, flat to there. And then this would have been another 1, 2, and then that would have been a 3, 4, 5, 3, 4, 5, something like this. Very bearish. Takes us down to really low levels that would be very bad, I think, for Bitcoin. Just because of the, let's just say that there's a lot of money that might be hesitant to ever get back in if we went back down to those levels. And when I say money, I mean big money. Okay, so that one is now off the table, right? We can't, we've broken this level, we've broken this level, so it can't be that impulsive move that I just showed. So that is off the table. Terrific. You know, there's not, you know, something else could develop where an impulse does come, but I think it would be a very different scenario and not worth talking about at this juncture. Now, the next scenario that is, to me, still strongly in play despite what some want to say on my Twitter, it is clear, it is close to invalidation, right? But it is still firmly in play. And we'll talk about why right now. So is that this would be an ending diagonal. So, and this is just an idea I've been tracking for quite a while since we got the funky wave structure in here. And, you know, only more recently would it have developed in this way because of this price action, a bigger ending diagonal. But the ending diagonal would be something like, let's say, 1, because we would have a zigzag here. Same way I just showed that 1, 2, 1, 2 would be, you know, 5 waves to there, flat, and then I would say the correction would go to here. Some sort of like running flat would be that. So flat A here. Let's see. It would be flat A, zigzag B, some sort of really ugly diagonal C. It's really bad, right? But, you know, you have to resolve this price structure somehow if you want to put an Elliott wave count to it. So that would be your A, B, C. And as we know in a diagonal, the motive structures are actually subwaves are corrective, right? So that would be the 1. That would be a 2 when this impulse finishes. And then we would come down. Something like that, right? Because in a diagonal, we wouldn't want this wave to be the same length as this. It would have to be shorter, and we would want this wave to be shorter than this wave. So, but we would want to create a new low relative to this. So, you know, we wouldn't create much of a marginally lower low, which is what diagonals do, and then deep retracement, and then another marginally lower low. So that would take us around to that same level we were targeting initially, around the 14K neighborhood. Now, why do people that don't understand the theory think that this is close to 0% probability? Well, that's because that this is playing out much more like an impulse than it is a zigzag. But as we know, and if we could go look in the S&P chart, which we will quickly, let's look at the S&P chart quickly. There's a little trade for you. That's setting up for members. We know that in this bear market, because of course the S&P and the Bitcoin bear market have gone together, that we see extended C waves. And it's not infrequent at all. Okay, terrific. So that could potentially just be playing out here. We haven't seen them as much in Bitcoin, right? We've seen moves that get quite bullish, but they're not, let's say, extended, right? However, we know that, you know, we do have very strong moves off the low that do get faded. So taking the context of our current market, our current situation into play, we know that it's not that far out of the realm of possibility. Now, in addition, we would say that no matter what, once you finish 3 waves, you've only finished 3 waves. And that's one thing that Elliott Wave, let's say, LARPers don't understand. People that don't trade this theory. If you trade the theory, you understand highly that 3 waves is a big deal. Doesn't matter how it plays out. When it's done, it's done. Okay? There's folks out there that think trading 5th waves is the best trade there is. Again, they don't know. They don't understand the theory, in my opinion. Okay, so when I say that this, I also said that when this wave finishes, right? Because I do not believe that we have put in a complete, either, let's say, proposed Z, C, or zigzag just yet. There are people talking about, including some of my partners, talking about that this is a completed 5th for this wave 3. I don't think so. I don't think enough time or magnitude based on some consolidation and things like that. I think we have another higher high to go. Matter of fact, I'm in a long right now, betting on that. Doing okay. Let me look over here, check on that. Yep, it's actually doing just fine right now. Looking for a break above, and then this is which is going to go try to test right now, and then that'll be a free trade, but I got a feeling it's going to be a big one. Anyway, here we go. This needs to finish, and once it does, it would be a completed potential zigzag. And then that would be our diagonal wave 2 in, which, again, what do we expect in a diagonal? A sharp, deep zigzag wave 2. So, you know, if you have over 100,000 Twitter followers and you want to come to my Twitter feed, probably look another way, because you don't know what the fuck you're talking about. I don't care how many followers you have. Okay, next. Again, okay, so when did this, real quick before, when does this scenario invalidate? Well, this scenario invalidates when we either take out the proposed 0 of the diag, so it'd be 0, 1, 2, right? So if we go higher than that level, or even before that, if this finishes, let's just say that is the 5th. I don't think it is. Let's say this finishes an impulse and it doesn't quite take out the high. As we know, a correction can never be 5 waves. So those are the 2 scenarios in which that invalidates. But that is the second scenario. Still well on the table. It's getting to the edge. And a lot of the best trades, right? I'm not saying to trade this at all, by the way. At all. But just in general, when you're trying to think about the theory, before you go call somebody out, understand that no matter what, the best trades are taken almost at the point of invalidation. Those are because A, everybody's against you, and that's usually when you're the most correct. But B, because you can set up a parameter for, if I'm right, it turns around. If I'm wrong, it goes through and I'm out. It increases your risk to reward, and it just helps everything. But it leaves, time for some scary things to happen. But those are the best setups. Okay. The next potential scenario, which I find to be the most likely scenario at this point, would be, again, within this structure, that this is an impulsive wave to the downside, is that we are putting in a flat. Oh, I forgot that I had actually, so before I can just, here's the diagonal quickly. Just I posted that one to Twitter. Here's your 1-to-1 that would invalidate your 3 if it got to that length, assuming that the high was in there, showing that this is sort of the expected depth for a wave 2 of a diagonal. A little deep, but anyway, there's that scenario. And then, of course, this is the flat scenario. Let's get rid of this stuff. Okay, so 3 here, 4 would rotate to there. And as you see, we would finish an impulse to this level. Now, as you see, I also have this 5th up higher, and this has been there since long before this current price action. This could easily slide down to here, but I'm just, I'm expecting more because of the consolidation level here to just get that little wick up. It just, there's this whole move has been extremely expansive and bullish, and this one just hasn't been as expansive and bullish. So I do believe that I think we'll continue on, put in some more divergence to the upside. We're starting to diverge, and then we'll retrace a decent bit. I showed the 4 here. We have a gap on the CME way down here, the low of this 4. I believe that we will sort of drop here, and then then at that point, we're going to be real concerned and wondering, is it the diag? Or at least if you care about what I'm thinking, you'd be really still 50-50 diag, or you really become 50-50 at that point. Right now, this flat scenario where this is an impulse is the clear winner. But if we do turn around, get real red from here, before going back up, fill this gap, then we would have what I would call could be a potential flat scenario. And then again, once the flat finishes, this isn't necessarily the exact look of it, but let's just say up here, that trade I told you about is about to break out of the downtrend line. Could be nice. Okay. Yeah, so it could potentially finish up the C of the flat. Of course, I would have to redraw this for you here. And at that point, then we continue, unfortunately, down and make new lows. Probably same area that we talked about before. We'd have to see how it plays. But with, around 14, could get a little lower, but I think it'd probably be around 14 again. Okay, so those are what I call the 3 most probable scenarios. All right, let's talk about the scenario that the bottom callers are taking and why I don't love it. Of course, it is in the realm of potential, but I don't care about potential. I care about probable, and I want to talk about why it isn't probable. And if you're a real Elliott fan of Ralph Nelson Elliott, make sure to stick around for what I'm going to talk about just after this, because I guarantee you aren't seeing it anywhere else. Okay, so they're basically going to accept that this is a one wave. So we're going to start all the way with the wave before the wave that they're calling, right? That this is I'm not a one wave, I'm sorry, a 5-wave motive wave, where we have this extremely deep sharp 2, then a non-alternating observing 4 that's also pretty deep and sharp, and an extended 5th wave. You do get what you would expect after an extended 5th wave. However, in the scenario that I'm going to cover next, for you real Elliott fans, that works as well. But sure, you could call this a motive structure. I just don't find it to be. We do nearly overlap, but we don't. We're actually just through what would be the probable wave relationship for wave 4 as far as depth. But we are through it, so we're outside of the highly probable area, which is the 382 to the 50. Again, we're not observing alternation. And the biggest thing is, how do you resolve this area down here? I personally have still yet to, once I get this far, this is going to be tough. I wanted to zoom in, but once we get this far away from a piece of price, I usually can just confidently resolve it. However, in this case, I can't because, let's just say it still impacts the potential for the count, right? So you're calling this a 1? Oh, you're going to call this a 1, and you're going to call all this a 2? But even this is 3-wave. So I'm happy to call it a piece of chart that I don't necessarily know how I want to resolve this to the low side, but I do feel very confident that this is what I would call, and as I showed earlier, a damn near perfect zigzag. Channel's a little better in log, but doesn't need to be. 2 very similar magnitude waves. Okay, so first and foremost, I'm going to say that this is a pretty terrible zigzag, and I haven't, so have you been prescribing to this the whole time? If you have, you're just really kind of funny. But I haven't, right? So have no need to go back now. And then, in addition to cope with that, to make this work, now you're going to accept that sibling waves within a multiple zigzag, the subwaves of the Y, so the subwaves of the Y as opposed to the subwaves of the W, and actually this would go here. So bad. The subwaves, yeah, because, so I even had that set wrong. The subwaves of the Y would be less than half the size of the subwaves of the W in percent terms, right? This is when you're talking about rules of Elliott, you're more looking for the percent covered rather than, people are always, well, in arithmetic fib measurements or logarithmic fib measurements. No. You're really looking for percentages. This isn't me telling you this. This is read the book by Frost and Proctor. But in any event, yeah, if we're gonna go into fib measurements, it's far less than half. Far less than half. It's only a little under half here in percent terms, but I'm trying to give you guys as much help as you can with this count. I'm not trying to give you a one-sided look. If we were to go ahead and measure, what would, it's literally less than 0.236, an extension of the previous, of a sister wave. So you're going to accept that these are sister waves. And then in addition to that, you're going to go ahead and just break guidelines that this X wave is literally, the X wave is smaller than the proposed B of the W, which it should be. This would be, so this X is a sister wave to this, because not just one of the subwaves, but both of the subwaves, because it's a 3-wave move, right? So it would be, one sister wave, it's another one, and then that's another one, right? So you're going to accept that this X is a sister wave to all of this. Well, that's fine. You can do that, but we have guidelines for a reason. This doesn't come close to breaking out of the base channel of the first W. It's breaking guidelines. It's a guideline. It's not a hard rule, but it's a damn good guideline. Let's put it this way. Okay, so that's where I'm going to mainly disagree with you, right? But I will agree with you that we did resolve down in 3. So if I disagree with the entire count, but I do agree with you that we resolved down in 3, what does that mean? It means that we probably haven't finished, right? I want the bottom to be in, but it just isn't as far as a probable count goes. But there is a scenario in which this move can continue on for quite a ways before it does go down. But it's not something that you're going to know from Frost and Prechter, Elliott. This is from Ralph Nelson Elliott himself. There's a concept that they threw out, Frost and Prechter, of his, called irregular tops and irregular bottoms. Now, one of the biggest reasons that I've been tracking that flat for you the entire way is because of the concept of an irregular top. I don't talk about this much. I study this a lot. I don't talk about it much. I've been studying it for a few years. Planning on releasing, let's say, a course, or I don't know if you want to call it a course or a training video on it soon, because there isn't much written about it. So there's been a lot of independent study. But the concept of an irregular top that finishes in 3 waves, and then Elliott calls it, it's retraced twice, which basically that just means that it's going to go like this and then go like that, right? So the irregular top, he has it sometimes to where it goes this way, but let's not get into it now. So the concept of this irregular top is that basically we would finish on 3 waves, and in this scenario, there would be a very long extended C wave after. Just a flat, right? 3, 3, 5, like I've shown, which is why one of the main reasons I've been so not adamant, but felt good about the flat is because, and these irregular tops and bottoms come after very strong waves. This is strong, right? Let's see, 4K to, let's see, 65K. So yeah, this irregular topping pattern happens next, and then extended C wave after. And that just simply means to us that we should put in a new high at some point, A, and B, that we should have a very extended C. And that extended C, we'll go back to log because that's the perspective we should be looking in. We'll go to 1 day. It typically will retrace into the area of, let's say, because it happens on larger scales, typically is what he's looking at, but it'll typically retrace into the 5th of the preceding wave here, right? Even here, depending on what you want to call it. So it's you'd either want it to retrace into this area, which it's done. So when we broke out and this was no longer a 1 2 1 2, that was always the expectation, or it could even get into this area, which we don't want to do. Again, I think that would be bad for crypto, but could happen. And this would be the next area. So if it doesn't turn around, actually, I guess around that 14 would technically retrace into that area. But that's just what Elliott has said. And I don't want to get too far into it. I'm going to do a full training video on this for the members in the near future. So this irregular topping pattern, but with irregular tops comes irregular bottoms. So in that scenario, say we had this irregular top that we would expect to continue under this way, so we could, and this would kind of suck, have an irregular bottom going on, because it could be the same, right? And that would be an extended wave, a strong move to the downside. I'd say we've had that, right? Finishes on 3, and then we have a strong extended C. This could go into the 30 range. This could go into the 40s range. But if we do continue on, and this could be quite bullish for quite some time, I'm going to take full advantage of this. Don't you worry. But this could really mess a lot of people up. My guy Monty Crypto has some scenarios that could potentially show this. But when this does happen, we would still eventually resolve to the downside. And at that point, we'd have to figure out, you wouldn't really expect to go that far necessarily, but we would have to figure things out at that point. But let's just focus on the concept of the irregular bottom that really could throw people off, that would help us resolve this 3-wave move down. But what scenario, other than the one that I showed you why I don't like it, would resolve us in 3 to the downside here? Some people might try to throw, oh, well, maybe it's a WXYX or I'm sorry, WXYXZ. That would fit a little bit better, but then you're sort of just ignoring the counts that stand out, right? That smack you in the face. Now this one, I would give you. You could call this one you could call this a zigzag quite easily, but to resolve this as a zigzag is a little tough. But even in that case, I don't like it as much for the other reasons that I gave why I don't like the double zigzag, right? Primarily this wave. That's probably, we could say, the main reason I wouldn't like this one. But again, you're also ignoring what appears to be obvious counts, and I hate to do that. So yeah, that's where I'm at with Bitcoin. I don't think the bottom is in. This irregular bottom concept, to me, for the bottom, if this continues on more bullish, I'm going to be very concerned about that going forward. And every retrace, I'll just be nervous about. Let's put it that way, which is good. You can always be thinking about it, because at the end of the day, as this goes more and more bullish, we look at the retrace. Does it look corrective? Does it look impulsive? Right? So that's the most important concept. All right, boys. I hope you enjoyed this one. Toot out.